One of the things that Squawk is best at doing is it helps you keep in the game. It helps keep traders in the game with relevant information only. Again, we're not talking about news that's developing on the Squawk Box channels and the S&P broadcast. I'm not talking about any commercials. We're not giving trade recommendation. We're not, wannabe traders that are rolling up their sleeves and talking all kinds of a big game about all sorts of different positions that we have on, or kind of establishing opinions based on the market or based on anything that we're seeing develop in the market. We're giving you that factual commentary, and we're talking about market participants as we're seeing them and the way they're acting in response to other market influences as they're developing and as they're occurring right in front of us. So that's one of the most essential things I'd like to try and make clear to traders and listeners, is that we're telling you exactly what we're seeing. I mean, we're providing that relevant information, which at times may be absolutely irrelevant for some, but it's relevant for others. And that's why there's, certainly we provide overkill at times, and we're providing more information than's necessary for some traders. But we've always felt like, similar to as the horses are rounding the track in a horse race, there's always something to talk about. There's always something to talk about, whether it be the lead horse all the way through the middle of the pack down to the trailing horse way at the end there. And if you're looking at a trading pit and you can't find something to talk about, then you're pretty much not looking at the right thing, and you're probably not even looking at a live, actual, real trading pit. I've always looked at the pit, and I've always felt like it's always in a constant state of development. From the second that they ring the opening bell until the second that they close that closing bell, there's always traders that are actively bidding and offering at any given price, at any given time frame, with any given intensity or lack thereof. And as I mentioned before, sometimes it is the lack thereof that's actually the thing that's most present and most that needs to be discussed. And that's why you'll hear us sometimes talking about how it's a very quiet trade and a very choppy trade. That's important information to get, versus you can hear the intensity in the broadcaster's voice when you're in an extremely highly energetic trade. I always tell our broadcasters and anybody that's giving me a break or in any of the new products that we develop that it's easy to squawk. The job is very easy to do during very high energy trade, and it's a funny thing versus it's very hard to do and difficult to do during low energy trade. And most people or most broadcasters would look at you and they kind of feel like that's really weird. You would think that as everything's developing and as there's all kinds of stuff to talk about, that's when it's very difficult, because you need to be able to tell and interpret what's important to talk about at any given point. But it's actually the exact opposite, because as long as you're talking about everything that you're seeing developing, as long as you're talking about all the participants and all the energy that they're putting in or the lack thereof, it's easy to do. It's during the lull, it's during the quiet times of the day when you really need to, as a Squawk broadcaster, focus and be able to find things to talk about, because the energy is a lot less and it's a lot less prevalent than it is during those high energy times. Those are the times where your mind tends to wander, and it's just kind of human nature, and it's normal for your mind to wander, but you need to kind of buckle down at those times, and you need to focus on the fact that at any given point there's a listener or somebody who's in trade who's dependent upon the information that you're providing. And that's why it's essential to continue that sort of streaming aspect in the Squawk. And that's why we always, again, we give it everything we have from open to close. And it's important for us as broadcasters to be able to not necessarily feel or make a decision based on when we think it's important to talk about details as they're developing, but just always talk about details as they're developing and let the listener interpret or pull out the actual information that's essential for their trading decision. Again, we kind of give you everything, all of it, all at once, all the time, constantly, from open to close. It's your position, it's your job as the listener to be able to filter out the information and to be able to block out some of the information that's not important to you. Filter out and extract that which is important and which is based or that's going to define market conditions, or filter out that information that's going to be influential in market conditions versus eliminate the situations or eliminate the information that's not essential and not prevalent in terms of making the market move in one direction or another. Again, and very similar to what I was just discussing, it's really important to understand that the Squawk broadcaster has very little interest in the market's direction or the market's outcome. It's similar to how the order filler, once he gets the order, he just executes the order. He doesn't, because he's there on a commission basis, he doesn't really care whether once he buys for a customer the market goes higher or goes lower. Don't get me wrong, he'd like to see his customer make money, because if the customer just never makes money, then eventually he wouldn't have him as a customer and he won't have the order to fill anymore. But from a broadcaster's point of view, we have no interest in whether the market's actually going higher or going lower. What we're really trying to establish is the market's energy or lack thereof, and its ability to kind of follow through or continue. So what we're doing is weighing instantaneously the participants in the market, and this is very similar to how the locals trade. We're weighing the participants in the market, and we're trying to figure out which one of those is providing a more influence on the market and more influence on the market's price activity. And this is very similar to how the locals trade. We're weighing the participants in the market, and we're trying to figure out which one of those is providing a more influence on the market and more influence on the market's price activity. And we've already established that for every buyer there's a seller. What really is important is how intense the buyer is or how intense the seller is, because at some point the seller backs away or becomes less prevalent and is less so energetic and less intense than the buyer. And the buyer will continue to buy as much as possible, but as that seller is backing off a little bit and there's less available, that supply is diminishing, and that's what's causing prices to move higher. Or as there's more sellers that are continuing to be extremely energetic, and more sellers that are pushing the market lower because they're in search of lower price, or they're in search of demand which is less present, then you're going to see the market continue to go lower, because again, the energetic or the more effective or the more the sellers instigating trade to the buyer, and those buyers are diminishing, and that demand is diminishing as the demand that's present is getting hit. And so the bids actually pull away and the demand becomes less prevalent at that point.